And welcome to the midweek trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. As inflation hits a new high in Nigeria, we get a sense of the cost of doing business at the ports. And Ghana and Denmark signed strategic sector cooperation agreement. Plus, the US dollar index extends upside, but below the 104 mark as investors await Fed rate decision. Great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. We see the Central Bank of Nigeria has lifted restrictions on the importation of milk and dairy products. In February 2020, we see the CBN restricted foreign exchange allocation for milk importation exclusively to 6 designated companies within Nigeria. The new circular provides an update on eligible items for foreign exchange, stating that the previous restriction on FX for the importation of dairy products and its derivatives has been lifted for all entities except the selected companies. The CBN noted that the initiative is aimed to stimulate domestic milk production. Let's get a check on grains market now. See Chicago soybean futures head higher today as unwinding of short positions by traders supported the market, while wheat firmed on worries over supplies from the Black Sea region. We see corn lost ground. That's the most active soybean contract on the Chicago Board of Trade. SV1, wheat, WV1, that's up $5.50 there for a quarter of a bushel, down 0.1%. Let's look at corn now and soybean. We see those are also hammered at this time, 0.1% for corn CV1 at $4.39 for a quarter of a bushel. Now we see soybean, that's not left out at this time. We see soybean also down there, $11.86 for half a bushel. So that's how the grain market is looking at this time. Let's get a quick check on the oil market now. We see oil prices a bit pressured again, just like yesterday, but still looking quite strong. Talking about the US grade WTI, that's $83.16, down 0.4%. Price of Brent there, that's $87.22. That's nearing that $90 mark. So we're still seeing a rally right now, but we're seeing some pullbacks at this time with geopolitics on the radar, 0.2%. And investors still looking out for what the US Fed is going to do next with rates, because they keep kicking, that what investors are hoping for when rate cuts will come. So they keep pushing that down. And we're seeing that impact the oil market. We're also seeing a stronger US dollar this time. Let's get a quick check on the metals market. We see gold prices, they're stuck in a tight range today as traders prepare for the key policy decision from the US Federal Reserve and remarks from Fed Chair Jerome Powell. That's later in the day. So we see spot gold was trading about $2,153 per ounce. US gold futures, that was at 0.1% lower at $2,156 per ounce. And we see the US dollar index, DXY, that's been rallying since about March the 14th this time. And we're seeing that pressure, put pressure on the oil market and also putting pressure on the crypto market at this time. We're seeing Bitcoin, they have that inverse relationship. You can see the DXY recovering from 102 points up to 104 points. So that rally is putting pressure on major commodities that we track at this time. All right, let's get on some other news now. Nigeria's real estate and construction industries have been greatly impacted by fundamentals of the macroeconomic dynamics. And that's according to the Managing Director and Chief Executive Officer of Wemabod, Mr. Yemi Jidirom. He says at this time, we have to focus more on getting this sector back on track. He was a guest on Business Morning earlier today. Take a listen.
There's no affordable cement. There's no affordable reinforcement. Chances are that if we need to pursue the affordable home concept again, there must be a new vista of conversation around technological warehouse and what are the other local construction materials that we must deploy in a bid to be able to provide these affordable homes. And government needs to come in this situation. Affordable homes right at the back of other costs, infrastructural costs that most developers are even unable to recoup. So it's the responsibility of stakeholders working with the government, private practitioners, to be able to put heads together and situate solutions around how we can bring this affordable concept home back to the front burner. But as it is, as of today, it's really, really challenged.
Now to our first conversation, we see the Central Bank of Nigeria has again reduced the customs exchange rate for computing import duty at the ports by 1.3%. The customs FX duty rate was reviewed downward from 1,593 naira to the dollar to 1,572 naira to the dollar. That was yesterday. And we're seeing some stability right now in the FX market. Looking at the close from yesterday, we see 1,560 naira to the dollar. That was the close we had yesterday. The open was 1,572 naira. So we're still seeing the level below that's 1,600. But looking at the logistics value chain now, and we're talking about rising inflation at this time. Let's see how much doing business at the ports drives into the inflation that we're seeing, at this time. Joining us for this conversation is Dr. Innocent Akuvwe, President, National Shippers Association of Nigeria, joining me right here in the studio. Great to have you on the show.
Thank you very much, Lady.
Right. I'm sure you guys, I'm sure you must be feeling some relief, at this point. We've had the Naira below 1.6 for a while now.
Yeah.
And definitely, hopefully, this would continue, going forward. We want to see stability. There's nothing wrong with a weaker currency. That's what some experts say.
Yeah, I would say.
But you need to see stability. But
Absolutely.
we're an import-dependent country. We need a strong currency, at this time. If we're export-dependent, that's a different story. So talk to me about this volatility we've seen in 2023, the later part of 2023, into the beginning of 2024. How's that impacted, business?
It has virtually killed business. That's the simple truth. And I'm sorry to say this. At times we wonder whether these brothers in government actually are not as human as we are, okay? I mean, just look at what you just shared now, moving from 1,573 or so, a little down.
Right.
That hasn't made any impact at all, frankly speaking. And what are we expecting? We expect that, knowing that this country is not a productive company, okay, virtually everything we do, we import, virtually everything. We're either importing finished materials or we're importing raw materials, okay? So the exchange rate at which duties are computed make a lot of difference. I mean, I want you to imagine situations where some companies had imported or had opened from M when the dollar was like 900 and something naira or even lower, depending on what you're bringing in. I mean, if you had paid for goods that will take some time to manufacture, and then they are coming in today, and you're going to do the computation of duty based on this exchange rate, the guy is out of business already. You understand? He's completely out of business. So the central bank did give instructions sometime that whatever exchange rate is on your Form M should be the transaction rate when your duty is.
And I believe that should bring some relief.
That should bring, but my problem is it being implemented by the customs? The answer is no, not yet.
But the directive has been given, then the customs...
That is one. Giving directive is one. Right. Implementing it is the other one, and that's the more critical one.
So is it that the customs are not following...
Laddie, if you ask me, I should be asking you now, who does the custom take instruction from? I should be asking you that question now because I believe you're a financial expert.
Right.
Who are they taking instructions from? Central Bank send a circular to all stakeholders. This is what it is. And that happened after there were so many issues. Today it is 1,600 and something naira for exchange rate. Tomorrow it is a different rate. And then the CBN now said, okay, whatever amount is on your Form M should be the exchange rate at the time of competition.
Starting from when?
Yeah, that's the question.
Because we also
one will take it that it started from when that circular went out.
Exactly.
Yeah.
So it doesn't go beyond, say, the COVID era, at this time, because we also have some goods that are still at the ports.
Look at what I say here. I told you, I said, look, it depends on what you're bringing in.
Right.
There are some equipments you pay that take over 1 year to manufacture, 2 years to manufacture. Okay, let's take the COVID era. There were a lot of issues. Shipments had a lot of issues. A lot of factories were shut down. By the time these factories came to work, or the workers came to work, and by the time they began to produce, of course, time has gone. Now, one would expect that for the fact that you know that payments have been made for this for a long time ago, assuming these companies borrowed money for those, interests are running, so how do they get some cushioning? They can only get some cushioning effect if those goods arrive and you compute the duty at the rate it was established, because it's not their fault.
Right.
Okay? So, but the way we are going now, a lot of businesses are shutting down. If you go to our ports right now, as I talk to you, a lot of containers are there, the owners can't pay duty. Because what they had planned, what they had kept aside for their duty isn't what they're getting. So that's a big issue of its own.
Now you have the double whammy of inflation and
yes.
Currency devaluation.
That's correct.
At the same time.
Yeah.
So we've been talking a lot about rising inflation.
Yeah.
In Nigeria.
That's right.
At this time. So with all that's going on, at the ports at this time, how much of that is feeding into the inflation that that's been on the rise?
But that's what it is, because what is causing all that? The fact is that the cost of doing business at the ports also has tremendously gone up. You understand? And this whole thing transcends. It's a long value chain. At the end of the day, it's the ultimate consumer who bears it. You understand? So what happens? Your consignments at the ports right now, you can't pay duty, so those goods that are meant for the market are kept in the ports. Okay, so there is already a short supply of those. So those outside, their prices will naturally do what? Skyrocket. Do you understand? And nobody does business for charity anyway. I mean, charity is a totally different thing. If I want to do charity, it's charity. If I'm doing business, whatever it costs me to do my business, I'm going to put up my margin and sell to the public. You understand? So central bank has a role. They have always come to say, this is what it is. Custom has a much more a role to enforce this. Custom should understand that they are not just revenue collectors, they're also facilitators of business. But they seem to lay more emphasis on revenue, what they will, I could read some custom areas announcing huge amount of money collected and all that.
Yeah, we've been seeing record amounts of revenue collected by custom.
How has that affected the business that is going on? How?
Don't we see more efficiency at the port?
We haven't, it's not there. It's not there. At times I'm a bit worried when, for example, you have custom clear your goods of the port. Okay, you were exited, and I want to believe some level of high officer in the customs would have signed your container off. All right? And then no sooner has that container left, a different unit of custom holds you back, and you're made to pay some money, okay, and it continues that way. For goodness sake, if a container was cleared from the port by custom, signed off by a particular custom officer, that goods should remain cleared off until it gets to its destination. If you have any reason to hold that container... So
once the goods, once you get cleared, at the port, then, you get your goods out of the port. What happens between the port and, the store?
A lot. I mean, there is a unit called FOU, Federal Operations Unit, I guess that's what it is. They are going to hold you first, okay? And then you show documents. I expect that you should have shown documents that you were cleared. And then the next thing they say, okay, turn your vehicle, take it to the customs warehouse. And then the issues, all kind of issues.
After you've been cleared at the port.
You haven't cleared. Of course, if you haven't been cleared, you can't come out. That's the truth. If you haven't been cleared, they call it getting out. If you're not getting out, you can't go out. So if, I had said it in several fora, that once a container has been gated out, which means some level of high officer in the customs would have put his signature to say, this container is good to go. If he had said so, that container should be truly good to go and should go truly all the way until it gets to its destination. But that's not the case. It's held up somewhere. The guy negotiates, he's let to go, he's held up again. So I want to see a situation where a container leaves a port, that container is held and is found to have done something wrong. We need to hear, and probably that's a good thing now, because today the National Association of Shippers are taking off effectively, because before now it's been at state levels and regional level. So right now we are operating at the national level. So now we will get to understand why a container that has been given clear bills to leave, is held back elsewhere by the same custom. We need to understand why. If it means us going to the court to get clarification from the judges on why this should happen, we will want to know. Because we haven't also seen where a particular custom officer who signed off a container was either suspended or queried. At least we don't know. I mean, we want to see that happen. You understand? Going forward, once a container is held, we've got to know, I, as the president, will get to know what has happened to the person who exited it. And I'll tell my members, once we have this, let us know. Okay. If we know, let's know the action to take.
All right, so we've been talking a lot about imported inflation at this time. And the last data we got from the MBS for imported inflation, we see for January 2024, 26.3%, February 2024 at 29.8%. This is imported inflation at this time. Even though we're seeing inflation coming down in major economies at this time, I'm sure with some of our major trading partners, we've seen the U.S. inflation that's tended downward. We've seen in the U.K. Just today we saw the U.K. inflation numbers. That also came down more than expected. Ghana inflation also going down, but it seems we're still having rising imported.
We're totally different.
Inflation.
I mean,
Well, is this all coming from the ports?
It's all about the ports. It's all about the ports, laddie. I'm telling you. I mean, why would importers in Nigeria contemplate going to destine their goods to Ghana, to neighboring countries? It's because of the issues we have at the ports. Okay?
What would you say is a silver bullet that can solve this problem, with when you get cleared at the port, you don't get any more expenses getting out of it. What can solve it?
Yeah, what can solve it is just get, I don't know, what we plan to do after this interview here is we're going to have a press conference later today, and we need to let our people know what's going on. And after that, we take a position, okay? We take a position and we will get to the appropriate quarters in the government to know how. Okay, let's not forget that we, as national shippers, we are like an offshoot of Shippers Council, who are the regulators at the ports anyway. So we need to dialogue. We need to sit down with Shippers Council and get to know how to solve this. I mean, everyone is a stakeholder here. If the Shippers Council are having their fora, customs are there, okay? Customs are there, everyone is there, so we need to we need to be bold and courageous enough to say, this is where the problem is. What do we do?
Right. So definitely, it has to be solved, because we've been seeing the central bank raising rates, trying to tackle inflation that's reached, new highs. But the same interest rates we've seen hiked in other climes have actually reduced interest. So if we don't solve these issues at the ports, what do you think happens to inflation in this country?
It's going to keep rising. I mean, that's simply what it is. So I think it is timely for us also to voice out as shippers, okay? Because let me actually tell you who shippers are. I don't know if I did that at the beginning.
Yes.
Shippers are people who own the cargoes that come into this country or leave this country. That's who we are. So we understand what it is, laddie. We feel that we wear the shoes, we know where it pitches us. We tell you, if you get us on the table and ask us questions, we'll tell you what it is. Okay, let me plot some scenario for you, okay? If I am bringing in one container of a product, either finished product or raw material, laddie, you know that if I could move from one container to 10 containers, the prices aren't going to be the same thing. I hope you know that. Fine. If I'm bringing in goods from China, the prices aren't going to be the same thing from Europe or from the US, isn't it? Fine. So now, The problems we have today is for some reasons, you want to bring in your goods from China because the prices are good. And where there are doubts about the quality, now that comes in and insists on a certain certification is done, fine. And then you bring in goods, customs says, no, this price is too low. But what they fail to understand is that there is a reason for you to have gone all the way to China, that the transit time is very, very high compared to Europe. It's because for that transit time you're paying for a lesser price. Okay? Now you are benchmarked against a price of somebody who has just done one container. You pull it off and say, no, this is the price. And then you up the price of a guy or a company that brought goods from Asia and then shoots up his duty. Again, the consumer bears it. You understand? And then you also try to kill customs, also indirectly not knowing, I'm sure they don't know, that they also kill the efficiency of good bargain. Because if I have been dealing with you for years, I should be able to say, look, I think we've done well enough that my prices should come down. Okay? And when it does come down, I come back to my country and penalize because I got a good price. Today, I'm happy that central bank now does price verification. So if central bank has verified your price and okayed it, I don't expect that another body in Nigeria will say, no, this is too low, and then jack it up.
Right.
So you kill the spirit of competition. You kill the spirit of good relationship between partners because there are companies that have built reputation over time and they get good deals.
Right. So definitely we need to solve the problem at the ports as soon as possible.
As soon as possible.
So that we can get better prices because the consumers keep taking the punch. At this time with rising inflation.
Absolutely.
I want to thank you so much for coming on, Dr. Innocent Akugwe, President, National Shippers Association of Nigeria. It was great having your perspective today.
Thank you, Lady.
All right, now let's head to the markets. We have Will Ibong with the details. Great to have you, Will. And I guess congratulations in order for Zenith Bank with their new group managing director.
Yeah.
And I know social media is buzzing a lot right now about
the first female.
And how easy on the eyes she is. I couldn't ignore that.
Wait.
Everyone's been talking about that on social media right now.
She's something, to look at. And it's really to say that she's got the brains to match it because that's what's important, the leadership and how the direction she takes the bank to.
Exactly.
And the heights that the bank is going to, reach based on our...
Women empowerment.
Yeah, women empowerment.
Right.
But let's just say empower, the equities market right now, I hope is doing really great. But we begin with major equities in Africa where sentiments were mostly positive at intraday. We see the NGX dipping further, correction still underway at that bourse. 104,000 points still hanging on there. But you see South Africa in the green at intraday, up 0.44%. And elsewhere, let's look at Egypt's EGX 30 up at intraday, making a recovery from, two negative sessions it has had this week, up by 0.15%. And we see Kenya also closing yesterday's session as Tuesday in the green, back above 101 points. Now let's check in on the NGX. Let's see what's driving sentiments there, what's driving this negative sentiment. And we're going to be talking to Mukhtar Mohammed, CEO, Finance with Mukhtar. Good afternoon, Mukhtar. It's good to have you on the program.
Thank you, Will, for having me. Good afternoon.
Yeah, Mukhtar, what's driving this negative sentiment? We're seeing stocks, continue to, investors are having a dampened mood right now. They're not giving us what we want. We want the green. So what's happening to the markets? I know it's expected, but what's driving stocks? What stocks are investors fading right now, not trading?
Especially China's television crew that love the bull. So, and the bear seems to be having it now. Definitely not really. We could see some losses, but I think they could be recovery before the end of the day because largely there are just small marginal losses in some other equity that are driving the market. But the stock like MTN is still flat, Geregu is still there flat. What is really driving, I think, is FCMB holding that is down by almost 3.8%. That is driving down the index. GTCO is still flat at 45 naira 85 kobo. Fidelity Bank is also on the upside. FCMB is also down. the major one that was done yesterday that really brought down the market a little was the Transcorp Power. It seems to be a gradual recovery. It's recovering about 10 kobo, but again, that is more comparable to what it lost yesterday. And also, other stocks are say trading flat. MTN is flat. Remember, it was one of those that drove down the market, but it's flat today. There's not so much activities on that space. But like I said, in the market, we still have another hour to the end of the market, and sometimes when sentiments are in between, a lot of investors tend to wait till the last minute before making some of those purchases or going into some of those stocks. So these numbers can change any moment from now. But for now, I think this is where we are now.
Okay, speaking of Transcorp, I'm just going to bounce off that. We did note that it made its first, decline yesterday since its listing on March the 4th. And that's 12, trading sessions being on a roll. But yesterday it recorded 0.03% loss to close at 382 naira. Now you said it's making a recovery back up there. Investors are taking advantage of that dip. But I just want to ask, investors had enough of the high of Transcorp Power? Are they beginning to, the sentiments there beginning to go lower, or are they just it's just a normal thing for that stock price right now to, after having 12 fantastic days of positive sessions, it has to go down, or this is the beginning of its roll down the NGX ladder?
Well, we need to take a clue from Geregu. And if you look at Geregu, then you look at Transcorp, you will see that what you're seeing there is not really anything surprising. We expected it to come like that down at a point. The stock market is not a straight graph. It has to be, there's the place for the ups and the down. And so the down is having it now. Again, also, what we've seen in the equity for a while, they've not been reasonable supply in terms of volume. And we saw that for the first time, volume was made available and that stock came down yesterday. So I'm not too surprised about it. Remember that since that stock makes its exit from the Transcorp holding itself, Transcorp holding has been going down from a high of about 19 naira and trading of a low of 14 naira. So that seems that the power company seems to be the one driving Transcorp. And so a lot of investors are beginning to look at opportunity to go in there. And when that volume was available yesterday, I think some investors were able to key into it. But again, in the market, they say when two elephants fight, the grass suffer. A lot of suffering this time in FCMB, in First Bank Holding, the holding company of First Bank. We are seeing that the elephants are fighting and the grass are the one enjoying, because that stock has also moved to 14 naira. So some investors in that stocks were the one trying to move out from there into some of these companies. And I think Transcorp Power is part of the companies that some of these investors that were supposed to be the grass that should be suffering. And now when the two elephants are fighting, they are the ones enjoying capital appreciation.
So we definitely hope to see more availability in terms of Transcorp Power for investors to possibly buy, because as you mentioned, it has been difficult to get, investors have not been able to get the stock because of, the stock not being available in the market. That has been driving that stock price high. But now that we've seen that first dip, we hope that now the stocks will be made available for investors to buy. But let's zoom in on Zenith Bank now. It has appointed its first female GMD, that's Group Managing Director and CEO designate, that's Mrs. Adora Umeoji. Can you tell us, what are your feelings now? It seems that banks are looking at the women to take the leadership of the banking, of the financial sectors, institutions. Can you tell us about this? What are your feelings, your thoughts about it? And do you see taking Zenith Bank to the Zenith?
Well, Zenith Bank is already moving towards the Zenith, and she is also part of the management team that is moving Zenith Bank to the Zenith. You mustn't forget that she is the deputy managing director of Zenith Bank. So we should also have that in the back of our mind as we keep on saying that she's moving Zenith Bank. And it's a good thing for the female folks like you. I know you're excited. I saw her lady was saying that the excitement is written all over your face, and I also could see it from here. But what we mustn't forget is that first, we've seen the women came in as chairmen of some of these banks. We had a Point First Bank. We had the Bukwa Wushika. Also, we had the chairman of Access Holding, also a female. And so, what all this boss is about, maybe because Zenith is a tier 1 bank, we mustn't forget that the woman that is driving Fidelity Bank at the moment, also the group CEO of Fidelity Bank, is also a woman. And maybe excitement is in the air because we've seen how this woman have moved Fidelity Bank from a penny stock to one of those stocks that investors are made so much capital appreciation from a low of 4 naira when she came into a high about 10 naira 50 kobo. So maybe that's what investors are excited about, that here come another woman. Hopefully it will be able to add the Midas touch to Zenith Bank to take it to the height that everybody thinks that Zenith should be. But I think it's congratulations to the women food. It came at no better time, especially after the celebration of the International Women's Day. Congratulations. Hopefully we, the shareholders, will smile at the end of the day. But again, with our appointment, it doesn't seem that it's driving Zenith Bank. Zenith Bank is down by 10 kobo today. So hopefully before the close of market, something may positively happen.
Of course, definitely. Investors are still digesting the news, and definitely we'll probably see that uptake on Zenith Bank anytime soon, as soon as she takes reins as GMD. Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for joining us on Business Incorporated.
Thank you for having me, Will, and have a pleasant day, laddie.
So we move on to the Middle East, where major equities traded mixed at intraday. In Abu Dhabi, the benchmark stock index inched up 0.08%, and this was helped by a 1.3% gain in Abu Dhabi Islamic Bank and a 0.5% rise in the Pure Health. Now, Abu Dhabi, as I mentioned, was 0.08% up. Now, let's look at Dubai's index, which also advanced by 0.21%. And this was supported by gains in utilities, finance, and consumer discretionary sectors. Now, still within the region, we see Saudi Arabia, on the other hand, trading in negative territory. It was down 0.31%. Also, Qatari index also down at intraday 0.24%. Now, let's zoom in. Let's move over to the U.S., where stock futures moved lower on Wednesday following a winning week for the major averages as investors awaited the latest Federal Reserve policy decision. Now, the Dow Jones Industrial Average futures were down 40 points. Now, we're looking at that market. We're seeing the S&P 500 futures also dipping 0.44%. Well, however, NASDAQ futures rose by 0.08%, and this is because the Fed is broadly anticipated to keep interest rates unchanged at the conclusion of its two-day policy meeting today. Now, let's check out yesterday's market close while we wait for that outcome from the Fed with our correspondent, Maria Bird.
Market ended on a high note on Tuesday as the Dow Jones was up at 0.8%, the heavy tech Nasdaq was up at 0.4%, and the S&P 500 was up at 0.6%. Many investors were hopeful to see how the Federal Reserve's two-day meeting will end up on Wednesday. But much hope is underway, even though interest rates continue to be high. But they are looking for all signs from the Federal Reserve that possibly interest rates might drop sooner than once expected. This meeting has many on edge, but policymakers will continue throughout the day on Wednesday until around 2 p.m. when big announcements are expected to be made.
Thank you, Maria. Now, Asia-Pacific markets also rose as investors digested the Bank of Japan's landmark shift in monetary policy while awaiting the U.S. Federal Reserve's interest rate decision. Speaking of, get a hot seat right now, waiting for the Fed. Now, meanwhile, Japan's Nikkei225 is closed for a public holiday, but let's drive back yesterday and see that the Bank of Japan on Tuesday raised interest rates for the first time in 17 years and scrapped its yield curve control policy, sending the Nikkei beyond the 40,000 mark for the first time in almost 2 weeks. Now, South Korea's Kospi climbed 1.28% to 2,690 points. And this was powered by 5.63% gain in heavyweight Samsung Electronics. And this is on the hopes for advanced chip supplies to NVIDIA. Also, this is Samsung's best day since September last year. Hong Kong's Hang Seng Index was up. If we look at China, 0.3% in the last hour of trade, while the mainland Chinese Shanghai Index rose about 0.55% to close at 3,079 points. Also, the People's Bank of China kept its 1- and 5-year loan prime rates unchanged at 3.45 and 3.95%. each. Now look at Australia. S&P 200 fell 0.1% to close after the country's central bank held rates at 4.35% for the third meeting in a row. So, Ladi, it's been a week of interest rates, holding rates, cutting rates, leaving it unchanged. The UK left it unchanged. They're anticipating for the Fed to also leave it unchanged. No hopes for cuts here.
Not yet, but we expect 2024 at some point. We might get a cut, from the US Fed. And it's quite interesting, when you were talking about what's happening, in Japan, at this time, they've experienced deflation for the longest time, and that's why they kept it, the monetary rate so loose, right there. And I'm wondering, have you ever experienced deflation? Have you ever?
No,
even if it's mild
I don't think I have ever. I don't think I would know. I've always known inflation.
You've always known inflation.
So, yes, and I'm hoping one day, if we ever get deflation is what I don't know which is worse off, if it's inflation or deflation.
I know deflation is a bad thing,
it's a bad thing.
Also in itself, but, the consumers enjoy because the prices keep going down. And you have more money to buy more goods. Yes,
but right now we just have to face the reality and see how we can resolve our problems, our unique problems, because it's definitely not working with the interest rate hikes.
At this time. All right, thank you so much, Will, for the update. All right, let's take it on to Europe now. We see EU member states and lawmakers reached a deal to cap duty-free imports of some Ukrainian grains. Well, Akram Akishi is with DW and he joins me from Berlin. Great to have you, Akram. So what's the situation now?
Thanks for having me, Ladi. In the aftermath of Russia's invasion of Ukraine, the EU opened its doors wide, allowing duty-free imports of Ukrainian grains to help keep Ukraine's economy from sinking. But this well-meaning move has been causing sleepless nights for farmers across the EU. Now, with their livelihoods on the line, the EU farmers have not been silent. From Poland to the heart of Western Europe, their protests have been loud and clear, demanding action. This maneuvering comes at a critical time. With the European Parliament elections looming, there is an undercurrent of political tension. The rise of far-right parties leveraging the farmers' unrest for their campaigns adds another layer of complexity to this issue.
All right, what will be the measures?
Well, the new EU deal renews the tariff exemption for another year, but brings oats along with eggs, poultry and sugar under the umbrella of safeguards. Those safeguards are like a regulatory shield aimed at preventing the EU market from being swamped by these products at lower prices. But here's an important detail. Wheat and barley are left out of this safeguarded circle. There will be an emergency brake mechanism for poultry, eggs, sugar, oats, maize, groats, and honey, and it's a stopgap to prevent any surge in imports beyond the average volumes that were seen in 2022 and 2023. Essentially, it's a lever the EU can pull to keep market equilibrium in check. This latest move seems aiming to appease local farmers while ensuring the Ukrainian economy is kept intact.
All right, what's happening in the markets today?
Ladi, today it will be a pivotal day for markets in Europe and across the globe. German inflation data and the eagerly awaited UK inflation figures are setting the stage. This comes as all eyes turn to the Federal Reserve's policy decision due today as well. Fed is anticipated to maintain rates but potentially signal shifts in future cuts. In the backdrop, key European Central Bank figures, including the ECB chief Christine Lagarde, are getting together and gearing up to share their insights, possibly hinting at a June timeline for ECB rate discussions. With UK and German inflation data in the spotlight, along with the Fed's decision and ECB's cues on the horizon, it will be a busy day for investors and traders.
Yeah, definitely a busy day for investors, at this time. Thank you so much, Akram, for the details from Europe. All right, now, so to other stories now. See, Ghana and Denmark have signed the second phase of the Strategic Sector Cooperation, SSC, on statistics to promote evidence-based decision-making in the country. This follows the successful implementation of phase one of an initial project which focused mainly on capacity building. Among other objectives, the agreement is to ensure informed decision-making among policymakers, enhance accountability, and also monitor progress of Ghana's green transition for relevance and effectiveness. And Kenya has a uniquely a low percentage of youth not in education, employment, or training, at about 15% in Africa. And that's attributed to high literacy status of the country. However, NEET youth in Kenya are almost twice as likely to be female at 19% compared to male at 11%, illustrating a gender disparity that stems from the education system. Although Kenya has a high literacy level, men are more educated than women at 85 and 78% respectively. That's according to the data. And South Africa needs to manage new and emerging threats to the economy, such as breakdowns in parts of its national water system. Some residents in Johannesburg, the country's economic hub, face a second week without water. The utility struggles to return supply after a blast shuttered one of its key pump stations, with taps running dry from Mbabela in the east of the country to the south of Johannesburg. Some residents are finding it difficult to go on with their daily lives. Our South Africa correspondent, Innocent Somosa, reports.
Thousands of residents are facing dire circumstances as the utility struggles to restore water supply following a critical pump station shutdown. Joburg resident Spiwe Mtombeni says simple tasks like cooking, cleaning, and even basic hygiene have become nearly impossible.
It's very difficult. It was very difficult for me, especially as a mother, not having running water in the house, hygiene most especially for hygiene purposes, because now you can't flush the toilet, you can't wash the dishes, you can't clean the house. So we would depend on filling up buckets, but the water is just not enough. It really disturbed me because, especially for my youngest child, we would have to go and collect them early from school because there's no water, there's no running water, there's no drinking water. So as that affected me because I had to make other plans. As a working parent, I had to make other plans, which meant that I have to spend more money finding someone to take care of the child.
As the water crisis deepens, residents are forced to adapt to a new norm where access to clean water is increasingly uncertain. Analysts point out that the government overlooked critical infrastructure maintenance.
Now, maybe the question that we need to grapple with is, what is the cause of this? I think partly is because of the appointment of wrong people in certain strategic places. Because if you are dealing with issues of water, you need to appoint professionals who can plan. Because you are speaking about infrastructure that is falling apart. So then the question is, why is that particular infrastructure falling apart? It is partly because of shortage of engineers, shortage of good professional managers.
This water crisis serves as a stark reminder of the urgent need for robust infrastructure and effective management of vital resources. From Johannesburg, South Africa, Innocent Somosa, Channels Television News.
Thank you, Innocent. Well, let's head straight to the crypto market now. See some of the headlines now. Bitcoin ETFs have seen historic outflows. Before now, everyone's talking about, when we're going to have a Bitcoin spot ETF. Well, that's come now, and we've seen Bitcoin hit new highs. $72,000, but we're seeing big outflows, at this time. We've seen that's a significant setback, marking the largest collective outflow that's in a day. That's talking about how much is left, most of these ETFs. We've seen Bitcoin price down to about $62,000. It did touch $60,000 at some point during U.S. trading hours. We've seen investors pull out a staggering $326 million from 10 funds, reflecting a growing unease right there in the market. So let's look at all the headlines now. We're seeing staking-enabled Ethereum ETF. We're seeing Grayscale Investment. They filed a preliminary proxy statement with plans to add staking capabilities to its proposed spot Ethereum exchange traded fund. This is aimed at mitigating inflationary pressures from Ethereum's proof-of-stake protocol and intends to preserve the trust value for Ethereum, shareholders. We also see crypto salaries surge 13% in the U.S. A survey by Dragonfly Capital found that U.S. crypto companies offer compensation packages significantly higher than those of international counterparts. On average, salaries in the U.S. Crypto sector, we've seen that rise about 13%. So we're seeing crypto workers in the U.S. at this time having really nice salary package there. All right, let's bring in Shehu Dania now, CEO, Alpha Geek Technologies. Join us via Zoom. Great to have you on the show.
Hi, good afternoon, Ladi. It's a pleasure to be here.
Fantastic. So we're all excited about the Bitcoin spot ETF, and now we're seeing outflows out of about 10 ETFs, at this time. Did you see this coming and this soon?
Well, definitely. Usually before the halving, there's always kind of like a retraction. Because, as it is, when the bulls have it, the bears need to come in at some point. Of course, a lot of people trade futures, so with high leverage, and definitely, all those positions need to be liquidated at some point. So usually, yes, we expected that there would be a retraction. But however, the market seems to also have remained subdued ahead of the Federal Open Market Committee's decision, which, was making a lot of investors exercise caution. And we know that recently there was a recent higher than expected inflation data coming from the U.S. Consumer Price Index and the producer price index also. So sentiments have dampened a little bit. I think investors anticipate something around, like 5 rate cuts in 2020 in this year alone, and inflation data has forced investors to change their bets to maybe like only 3. So I don't think that those rate cuts will be coming. The likelihood of rates going higher, and that would affect a lot of investment. So yeah, people are taking caution. So
right.
It seems.
And with the way it's going, we're also hearing that there might not be rate cut in 2024. That might be pushed down the line even further. But how much of the pullback we're seeing with Bitcoin? Because we're seeing the US dollar actually rallying. That started about 14th of March. That's the move we've seen from the US. That's the DXY. That's that index. It's ranging from 102 points to 104 points. How much of that is weighing on Bitcoin at this time?
I think it's quite a bit, but not too much, because there's a lot of bullish news for Bitcoin. The ETF one, the halving coming, there's another one. But what we are seeing, I think there's some theory about there's a lot of stuff that's been going on in Grayscale. There's been high outflow of money, and there's been also a lot of investors are pulling out. And I think there was someone who actually placed a trade of over 400 Bitcoin on BitMEX. So a lot of people trace and track all these whale wallets. And if someone moves and sells 400 Bitcoin, evidently that's definitely a sell signal for a lot of people. So the ripple effect would have. So the US dollar not directly affecting Bitcoin, because Bitcoin itself 2024, because of the halving,
right,
it's be a very good year for Bitcoin.
I guess investors will just find any excuse to take profit, at this point. Thank you so much.
Definitely.
Thank you so much, Shehu Dania, CEO, Alpha Geek Technologies. It was great having your perspective.
Thank you very much for having me.
All right, so that's how the markets are looking today. That's the show today. Thanks so much for watching. You can visit channelcv.com for more updates. You can also watch this again on our YouTube channel. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.